Good morning, everyone. I'm Julia Boorstin. I'm so happy to be joined now by Chen Amit. He's the co-founder and CEO of Tipalti. And you are here today because you are announcing a big fundraise and an $8.3 billion valuation. Tell us about the raise. Who's leading it?
The leader is G Squared. They led our secondary investment in March of this year, and this is their second investment already this year in the company. And they were joined by the likes of Morgan Stanley and Marshall Wace and several of our insiders to lead this round for us.
And 270 million raised. I mean, that is a massive round. What is it that you are looking to do with that new funding?
Yeah, we are growing on all cylinders. Like we are firing on all cylinders and growing all parts of the organization. We started the year with 350 employees. We're more than 700 today, and we'll grow at the same pace next year. That costs money. The reason we're growing so fast is that we are facing a huge opportunity, a huge market that is extremely underserved. We are in a unique position to lead this market. Investors understand that, and they want us to go as fast as we can.
So tell us about that market. I mean, I think that people are much more sort of familiar and have a much better sense of what the fintech companies do that are intersecting with consumers. But you are a B2B fintech. What is your business?
Yeah, we help finance leaders in high growth and mid-market companies between 50 employees and 1,000 employees. We help finance leaders in these companies manage financial operations. The challenge for that group is that you already have the CFO, the VP Finance, the finance team that understands what great execution looks like, but funding and resources go to other places in the organization when you are in these mid-sized companies. They go into product, growth, customers, employees, anything but the back office, suppliers, and accounts payable. Therefore, when you solve for this group, you have to solve for a very broad challenge. You need to go relatively deep because there's already complexity with the challenges mid-market companies face, but it needs to be very, very simple. That's the crux of the problem. The breadth, the depth, while keeping it very simple, and keeping things simple is hard work.
So the software, it's effectively a software to help financial executives at any company manage their data and also their team. What are these tools that you're giving them, and how are they different from what they might have had access to before?
Yeah, we help them with managing suppliers, tax compliance, anti-money laundering, procurement, invoice management, managing purchase orders, currencies, payments, regulations around payments, closing the books at the end of the month. Really a very broad set of challenges that they're faced with. The customers we meet regularly do it manually, using emails, Excel sheets, using the bank, very, very cumbersome and manual. And especially under COVID, work from home, hybrid, all that, we have anecdotes from customers where the CEO and the CFO meet in the parking lot of a Walmart to co-sign a check. That's just not working these days. They need digitization. They need to be more efficient with their finances. They need to have better controls, and that's what we provide.
And so if a lot of this is being done manually, are there other software companies or other fintech companies that you are competing with here? What's the closest analog to what you're doing?
Yeah, so we're fortunate that around 75% of the deals we win are not contested. We meet those customers with their manual processes, and we need to help them move from their previous ways of doing things manually to an automated way, which is a great position to be in. And we're fortunate that we don't have to care much about competition, more so about how we solve for these customers, how we help them automate what they do. If you want an analogy, in the small business, you have Bill.com, a relevant company that serves small businesses like in the 10 people headcount, more or less. We are in the mid-market, kind of 40x the size of the companies that Bill.com supports.
So tell us a little bit more about your customers. You say you're in the mid-market. How big are the companies that you mostly serve, and what are their particular needs? And are they in certain sectors, or does this really apply to companies, or does your software help companies in any sector?
Yeah, our customers, we generally target these 50 to 1,000 employee customers, but they grow with us. No one outgrows Tipalti. There's a metric which I think we are the best in the world outside monopolies, and that's retention rate. We retain 99% of our customers on an annual basis. I think this is one of a kind in terms of this metric, and therefore we cannot afford, quote unquote, any of our larger customers to outgrow us. So we started, I'll give you some examples. We started with Twitch, the streaming business that Amazon owns. We started with them when they were a 200-person organization. Today they are a 14,000-person organization. Started with GoDaddy when in one business unit and expanded Twitter, Roblox, and the such. But we target the mid-market, those 50 to 1,000 employees. And again, no one outgrows Tipalti. I forget what was the second part of your question.
Oh, no, I'm just curious though, and just to move on to sort of the way that you're going to be growing, are you offering a suite of products, or is there one core subscription service? And I'm just curious, as you look to growth, is it more about adding new customers or also getting your existing customers to add new services?
So the first priority for us is to reach the broadest audience possible. When you have the retention rates we have, you want obviously to serve as many customers as you can. We are growing on all fronts. We're growing inside the markets we operate in already. We're expanding into new markets. We opened our UK presence a couple of months ago. We're already 40 employees there, and we'll grow to over 100 next year. We'll open in Europe. We're operating in Canada right now, and we'll expand geographically. But you're absolutely right. It's a platform. We're adding more and more capabilities. Earlier this year, we acquired Approve, a procurement solution. We announced that we're now supporting virtual credit cards. We're supporting expense management. We'll be announcing more of these capabilities. And one target for the use of the funding is to continue to expand the product. It is actually that in the next 18 months, we will invest in the product as much as we did in the 11 years prior combined. So there's a huge roadmap, very exciting roadmap that will expand the platform and solve more of the pains of our customers.
So when you say corporate credit cards, it makes me think about Brex. And I'm wondering if you see yourself as going into more competition with what they're doing.
We don't see them in the competitive landscape. So we capture everything in every deal we work. We don't see Brex, we don't see Divi, Ramp, all these companies. I think they target smaller customer, but the use case is not very different. It just comes as a broader, as part of the broader platform. So if you need virtual cards, if you need corporate cards, now on top of everything I mentioned we do to our customers, now you also have this capability. And again, for the finance leader in mid-market company, the fact that they can reconcile everything in one place, control everything, have the same rigor and control around all of the things they do in one location is a unique value.
And just a final question, as you think about your future, obviously you have this new war chest, a new big valuation that should drive your growth for some time. But as you look at exits for the company, what is your outlook on going public, especially because we've seen so many of the IPOs of the past year now trading dramatically below their IPO price? How does that impact your outlook?
Yeah, we could have gone public if we chose to this year. We're performing extremely well, but we don't need to. There's no driver to go public anytime soon. We are obviously able to fund in the private market, to generate secondary for employees and shareholders in the private market. So we are in no rush. It is an inevitability for us that in the next 2 years, 3 years, 4 years, we will go public, but we're in no rush to do it.
Well, great to hear from you. And we're very curious to see where things go from here. Big deal, big valuation. Thank you so much for talking to us on TechCheck today.
Thank you for having me.